the FOMC developments and extra hikes, or rather the extra hike and less cuts for 2024. Tzitzit paid on the FOMC. Also, if you recall, we mentioned federal funds futures pricing much more in a more dovish way. They in fact still kind of do, and market expectations kind of crushed with Powell's interview press. I mean, point is, market was chopping at resistance 44, 45, 45.50, and FMC was the catalyst it was looking for. That's how it works for crypto sometimes too. Price is chopping at good technical areas, levels, and suddenly headlines or catalysts come out and move results. It'd be hard to just cut through 45, 46 like it's butter, because there's literally nothing to new highs above it. So yeah, I think that's more or less expected, and we'll see where it goes from here. Now, also dollar has been on an incredible rally past 2 months. I think it's making new year-to-date high as we speak. There is an extended also debrief for last week macro and overall in the newsletter that you should read if you haven't already, covering yields plus more. More stuff that I'm not super well versed in, and it's not point talking and elaborating right now. So with these 2 points considered, let's talk crypto. Yes, BTC is also heavy, but doing way better than you'd expect, I think, compared to past months where we would massively underperform stocks. Same goes for being so resilient to the DXY pump. That said, we're not doing incredibly ourselves either. Structure looks kind of bad, little to no bear euphoria on metrics, and we even got Sailor Muse today as well, which means we nuked from 29K, retraced BlackRock, despite his $100 $150 bid cushion. Now, my personal view, considering these arguments, is that both sides are putting up a fight, and coincidentally, we're back in the 26K range. I feel like range will be our friend for at least a good month or so. Even if we go lower, it feels like 25K will act similar to 6K and will give bears a hard time. Many people sorting the lows. I think if TradFi trends stay like they are right now, yes, of course we can break down, but overall ranging would be my bias here. Not getting too bearish at lows, not getting too bullish at highs, just taking what market gives and waiting for a more clear trend. That means also adjusting your expectations of returns as well, right? For the entire crypto market, because I see this all the time in my trading as well as others. The inefficiencies that are available to cuts are not just there as large as they were in the phases where market was very active and people were doing tons of volume. You read BitBit's note on this newsletter issue. Binance volume is down drastically. So when you're in positions and you're up nice, in my honest opinion, it pays to get into the habit of the likely exit, taking that money and going for the next trade. I think the moves of the past where you'd open a scalp and ended up swinging it for 3-4 hours are just over. It'll work one time and out of 10, and then the other 9 you'll popcorn tilt, make mistakes, stuff like that. I think that's what range is your friend means practically. So yeah, not chasing and taking the likely exits. That's on BTC. ETH, in the meantime, has been absolutely depressing. Chart looks worse. Been a steady and sad bleed, which probably doesn't end good. ETH BTC, I think Jason mentioned that too, has very good support here and a bit lower, but there has been no reactions at all. Nobody charged it anymore anyway. I don't know what's up with it. And looking at the chart, I realized that I don't think there has been a period in recent times where ETH weakness compared to BTC has been sustained for so long. There's probably some explanation, but yeah, it's definitely weird. Thankfully, alts, some of them are totally on their own playbook, which is good for trading. For example, WLD has been up only, BLZ choppy but structure intact. TRB also didn't go to zero like some other popular cartel coins did, and has some crazy weeks / gifts. I think the story remains the same for these alts throughout past months. If ticks and liquidity are there and they're gonna have eyes on them, people are gonna be trading them. If you got edge and spotted certain patterns, etc., doing good, they're good to trade. You of course gotta manage size wisely and your risk. I mean, I'm pretty sure you know that stuff already. They can pay good until they take it all back. Just musical chairs, right? Lever is a good example of that. Maybe Glimmer will be similar tomorrow. I think, if I'm not mistaken, Dion posted it's gonna be listed tomorrow for perp trading, and that's pretty much it. Also, last thing for the DOJ tag yesterday, the breakdown is this: some address that had the DOJ's $250 million last batch started transferring to an address that sent funds to Jump and Bybit. It's probably not DOJ or other. We can know if it is, if they veil their movements well and borrow against the spot. But yeah, it's probably a false alarm. The only explanation or cope rather is that considering that DOJ address was never used again and had 250 million on it at one point, maybe it's somehow affiliated or at least part of the OTC service that handles largest sales. Could explain yesterday's PA or could be complete cope. As I said, I wouldn't pay any more attention to it, to be honest. Just trade what's in front of me, what the chart is telling. Yeah, don't have anything else for today. If you guys have anything to bring up that's good to discuss, or questions or whatever, feel free to do. Okay, if nothing, it's gonna be a brief one and we're gonna end it here. Thank you. Thank you for your time.
Thank you, Adi.
Thanks, Adi.
Cheers, mate.
No problem.